yesterday was more about some of those stock-specific, news-specific moves, even within the broader end of the market. So what with the move on sugar, in shipping, defense, they were the ones which were in focus.
Siasha, we've seen extreme of everything actually in last couple of days. A monster rally, monster momentum or extreme momentum, and then technical conditions which are stretched again extreme in terms of overbought conditions. Now typically when you see extremes, a big rally, lot of momentum, big bust in liquidity, and then extremes in terms of technical positioning, this is not going to last. Now when these circumstances have happened in the past, either you've seen a pause or you've seen a sharp reversal. Now reversal is unlikely, but a pause I think is evident. Why a pause is evident? Because large part of the rally also what we have experienced has been a function of global markets. And globally post the Fed meeting, that one day a big move in US markets followed by a great day in Asia, we've not seen a lot of follow-up buying per se. So globally you would say crude is up, yields are flat, equity markets in a sense are consolidating. Then the data in the F&O market also seems to be indicating that at higher level, demand and supply equation seems to be indicating that suddenly there is supply coming by by options writer. So you add all those things up, it appears to me that we are in for a pause, not a retreat, maybe some consolidation. I continue to maintain that in this kind of a market, you should shift from small cap to large cap. If you're not doing that, start raising cash. Rather than getting governed by FOMO, just don't give into that temptation of FOMO, because if you don't give in the temptation of FOMO right now, 3 months from now, you will enjoy JOMO.
So you're joy of missing out for those who are not, in sync with what the lingo is.
Yeah. So, this kind of a move, as you said, it's just a bit of a consolidation. So no need to look at this as a buying opportunity whatsoever.
No, we've seen just one day off.
Exactly.
I mean,
not even off.
Not even, 38 points on the Sensex.
No, my point is that when you have a combination of extremes,
yes,
it's been an extreme rally or a monster rally. The bust of or the commitment by foreign institutional investors in the month of December again has been extreme. Market technicals are also extreme. This kind of a setup does not last. Now, historically, when you see this kind of an extreme positioning, it ends badly. That's what market has taught us over the years. But I don't think we are there in terms of the penultimate lap where it's going to end badly. I think we are in for a pause. In a pause, you will see a little bit of mid-air, turbulence here and there. Some sectors will come back, some sectors will go down. So take some profit off the table. It's advisable. You're making money. Yeah. Lock some gains. Enjoy. Spend some money. Go for Christmas holiday. Take a chill pill.
Yeah, and like you said, that one-day aberration, and that's what played out as well when it comes to the liquidity situation. The FII is a very mild sell figure, but a sell figure nonetheless after that mammoth spree of buying over the last few trading days, especially in the month of December. In fact, just alone, we're about, the 19th of December, and FIIs have pumped in close to 29,600 odd crore rupees. So that is pretty impressive, but yesterday a mild sell figure. But the other interesting part is the fact that the India strategy notes as well are out, and Morgan Stanley and Jefferies as well have come out with their latest notes. Morgan Stanley talking about how the Indian equities continue to outperform emerging markets, and that the absolute valuations for MSCI India are down marginally. Jefferies alluding to the fact that the economic indicator is showing that activity has slowed a bit in the month of November.
Yeah, so both the reports in a sense are just, a summary of the market positioning. I mean, it's not a tactical idea for 2024. I guess if you look at the Morgan Stanley report, it is more of what we actually know right now, which is that, markets are at an all-time high. It's been a great year. Domestic institutional investors have really been the differentiating factor. And in terms of the macro and the fundamentals, we are at the right place at the right time. Jefferies, well, it's about the tone in terms of activity where they like power, consumption trend is resilient, capex indications are very, very strong. So it is more like a neat summary of where we are right now. But if you have to look at the sum total of what Morgan and Jefferies are trying to indicate, all of the common thread which connects them, I think is the fact that markets the economy is in a good shape, capex is strong, the resilience by consumer is decent, which means as we move from 2023 to 2024, I think the attractiveness to invest in India or the resistance not to book profits into India, I think would be there. I want to look at that FII-DII number. I think we are ignoring the setup right now. For me, I think that will be the differentiating factor next couple of months of January 2024, because January 2024 you have this year beginning allocation impact. Now that's the December number, guys. Look at it, 29,000 YTD, and which is where Aisha Awan we need to pay focus. Now look at this number. Hello, it's a red of 18,000 crore and it's a buy of 1,75,000 crore. Now just understand the perspective here. Large part of this flows by domestic institutional investors is a function of SIPs. That SIPs ain't going to change, which means we are looking at about 12 to 13,000 crore on a monthly basis. That means 1,30,000, 1,40,000 crore will still come next year. Imagine if foreign institutional investors, if we get a reversal there and that red becomes green, then we are looking at a very different market. Suddenly from an institutional side, there would be no sellers, and which is what I think we are moving in right now. Sometimes in market there is a selling panic, sometimes in market there is a buying panic, and are we in for a buying panic in January 2024? Let's see.